Portion sizes can be determined based on the following variables. First, number of courses to be served. Second, size and design of crockery. Third, type of customer. The last is menu pricing structure. Portion sizes can be controlled based on the following factors. First, buying food of specific portion size. Training staff on how to control portions and why it is important. Using appropriate utensils, equipment and measures to serve food. Last is supervising staff during service. Standardizing portion sizes of food items. The portion sizes will be a debatable point all the time. Generally speaking, the more expensive the meals, the smaller the portion sizes. This might sound strange, but the more expensive the menu item, the better quality based on the following. The relationship between portion sizes and meal cost is often debated. In many cases, higher priced menu items are associated with better quality, ingredients, and preparation methods. This connection may lead to smaller portion sizes, emphasizing quality over quantity. It's crucial to consider customer expectations and satisfaction when standardizing portion sizes, as perception of value are subjective. So this is the menu item, the better quality based on the following. Finer breeding in the animals. Hand-raised cattle are more expensive than range feed. Limited number of imported items. Popularity may make it hard to obtain, so the price will be higher. Seafood tends more expensive, stocks are low. The list provided below highlighted the recommended average size of each type of food item to be used in casual or fine dining type of restaurants. The suggested sizes for meat, fish, and poultry are as follows: 150 gram in pastry or similar, 180 gram pure meat fillet steak, 200 gram sirloin, rump, 250 to 300 gram T-bone. Farin, farinaceous, potato, pasta, rice, lentils. 100 gram for a main meal, 300 to 75 for an entry. Shellfish, 60 to 90 gram per entry portion depending on how rich the overall dish is and what else is served with it. Soap, 200 to 250 ml per entry portion. Sauce, 200 to 50 ml per portion depends on the richness of the sauce. Portion control can be by size and not weight. The more slices, the more profit. But will the customer be happy with the serving size? Customers expect a large slice of cake, but most of the time, they cannot finish the cake because the serving size is too large. But if you charge them the same price for a smaller piece, they will think it is too expensive for what they are paying. Balancing portion size for profitability and customer satisfaction is indeed a delicate task. While increasing the number of slices can enhance profits, it's essential to find a size that aligns with the customer expectations. Offering reasonably sized portions at a fair price ensures customers feel they're getting value for money. Communicating the quality and craftsmanship behind the smaller portion can help manage customer perceptions and promote satisfaction. Cakes 20 cm, 8 to 10 portions, 25 cm, 12 portions, 30 cm, 16 portions. All of the above depend on the thickness and richness of the cake. So, to obtain good portion control, the chef or cook needs to know the yields for various raw and processed products, they work with. Therefore, it is important to make a habit of regularly counting, measuring, and weighing food products in the kitchen when working with them. For example, how many dry biscuits and in a packet, slices of bread in a normal slice loaf, how many apricots halves in a tin weighing for 445 gram.
Utilizing standard recipe correctly. A standard recipe is a precise record of ingredients, method, serving instruction, and cost of any food item on a menu. A standard recipe needs to include summary of ingredients, requires quantity or each item, specific preparation guidelines, garnish and service detail, portion sizes, accurate cost, percent wastage, date. It is important to use standard recipes in order to achieve the following operational goal. Standardized production of recipes regardless of who make them. Consistent quality always tastes the same. Consistent presentation always look the same. Consistent portion size always the same quantity. Easy to calculate cost of dish and re-establish cost of dish. Customer satisfaction. Using standard recipes is crucial to standardize recipe. Production maintain consistent quality and presentation, ensure uniform portion sizes, facilitate costs, calculate, and ultimately enhance customer satisfaction. Managing inventory costs. Companies that produce and sell tangible goods or resell product from other firms must track and manage potentially hundreds of thousands of units of inventory. Using systems to control inventory units can help companies achieve the goal of inventory management. These include objectives such as keeping costs controlled, increasing profit, reducing theft, managing cash flow, and ensuring that the end of the customer always has a way to get their hand on the product or services they want and need. Companies that deal with tangible goods or resell product from other firms must efficiently track and manage potentially hundreds of thousands of inventory units. Implementing inventory control system help companies achieve objectives like cost control, increased profit, theft reduction, managing flow, and ensuring customers always have access to the product or services they desire. Avoiding stock out and lost sales. Basically, you have to make sure that your customer can buy your product and or service when they need or want it, so underlie one of the greatest reasons from the inventory control. An effective inventory control system typically include as well as planned replenishment system. For example, when the software system detects predetermined low inventory level at a store location, it can trigger shipment from your distribution center or from a vendor to your store to replenish the stock. To avoid stock out and lost sales, it's crucial to ensure that customers can purchase products and services when they need or want them, making effective inventory control a key factor. An effective inventory control system typically include well-planned replenishment system like software that can quickly detect low inventory level, a trigger shipment from distribution center or vendor to restock store shelves. Method of tracking inventory system. As an objective of inventory control and part of a company's goal to record inventory costs correctly, various methods exist for tracking inventory units to help with properly accounting for them and for determining how to restore them as well. To achieve the objective of accurate inventory cost recording, various methods exist for tracking inventory unit and ensuring proper accounting and storage. Stock control system. In owner-operated establishment, management personnel, previous experience, industry experience, and computer knowledge as well as individual preference are major factors in determining the system in use. In owner-operated system establishments, the choice of stock control system depend on managing personal experience industry knowledge, computer proficiency, and individual preferences. Computer-based system. Articles such as Lakeyure or Linen detailed regarding deliver are entered into the computerized system may cover all the stock item or only nominated computer to update stock on hand figure, and then this stock level may be altered automatically as point of sales cash registered. Terminals immediately decrement that this reduce the stock level when sales are made, or manually as staff input data reflecting internal stock transfers from department to department, delivers, return, etc. Computer-based system like your control system can automate that tracking or stock items. They may record delivery details and adjust stock level either automatically through point of sales registered or terminal during sales, or manually by staff input or internal stock transfer, delivers, return, and many more. The advantages of computer-based system are the following. Quick generation of management report. They can be produced whatever required basically at the touch of the button. Compact record keeping. The computer-based option takes less space than a paper-based one. Added security. Password protection provides a level of security not available with manual system. Enhanced level of staff compliance with control procedures where a computer-based stock control system is in use. Staff realize all operations are monitored and analyzed, and tend to comply more with standard operating procedures relating to the stock control. Flexibility. Adding new stock and deleting old stock is quick and easy. Automatic updates of stock level as items are added or decremented from stock. This level automatically adjusts to represent computer-based current control system offered advantages such as rapid report generation, space efficiency, enhanced security, improved staff compliance with procedures, flexibility, and automatic updates of stock levels.
So next is the disadvantages of a computer-based system. So the disadvantages mentioned highlight the challenges associated with implementing a computer-based system in a hospitality business. The initial cost can be a barrier as owners might find it hard to justify the substantial investment, particularly if they believe the money could be used more effectively elsewhere. Additionally, concerns about system vulnerabilities such as power failure or equipment breakdown can deter adoption, although these events are rare. Moreover, the time and effort required to set up and maintain the system can be daunting for new users. They may worry that the implementation process will divert their focus from the primary goal of running the hospitality property. Keeping the system up to date might also seem time consuming, leading to reluctance in embracing the technology. Despite the concerns, it's challenging to convince successful business owners, especially those accustomed to their existing methods, of the necessity of transitioning to a computer-based stock control system. Overcoming these barriers often requires demonstrating the long-term benefits, efficiency gains, and improved decision-making capabilities that such system can offer in the competitive hospitality industry. The need to upgrade to a POS or point of sale system provide the perfect opportunity to combine a new stock system as well. So next is manual system. For stock control is a traditional paper-based method that has a notable advantages. Firstly, it is cost-effective to initiate requiring only basic supplies such as cards, sheets, records, and books. Unlike computer-based system, there are no significant expenses related to software or hardware. Secondly, records in a manual system are tangible and visible. People can physically turn pages and see the figures, providing a sense of reassurance. This visibility can be comforting to individuals who might feel uneasy when a figure disappears from view on a computer screen. Lastly, accessing the required records in a manual system does not demand specialized knowledge or technical skills. Anyone familiar with the system layout can easily navigate through the records, making it accessible to a wide range of users without the need for extensive training or expertise. Next is the goal of stock control system. First is debtor theft. An effective stock control system acts as a deterrent to theft. Staff members are less likely to steal when they know that their actions are being monitored and recorded accurately. Next, minimize waste. By keeping precise records of stock usage and revenue generation, employees tend to be more careful with stock. They use only what is necessary, recycle where possible, and adopt cost-effective practices, minimizing waste in process. Third is ensure correct pricing. Monitoring cost prices regularly is essential, especially when costs fluctuate. By, by knowing the current cost price, businesses can calculate appropriate selling prices, ensuring profitability and accurate pricing for products or services. Fourth, generate departmental performance data. An effective stock control system provides valuable insights into their departmental performance. It indicates how each department contributes to the overall profit of the organization. By identifying both successful and underperforming departments, businesses can make informed decisions to optimize their operation and increase profitability. So next is system limitation. In the hospitality industry, a significant portion of stock, especially food items and many beverages, is highly perishable. Unlike other businesses, these items have a limited shelf life and come with a definite use-by date. Once they expire, they cannot be sold, leading to a total loss for the organization. This limitation highlights the need for effective stock management strategies to minimize waste and financial losses due to perishable goods. Next is type of supplies. For the purpose of these notes, stock can be seen to include food and beverages covering all departments, processed and unprocessed items, alcoholic and non-alcoholic stock, equipment all types including maintenance, cleaning, and office equipment, linen including housekeeping, bar, function, and dining requirements, stationery, all office requisites as well as internal documentation, cleaning supplies and chemicals for use throughout the property internally and externally, meal vouchers used for promotional purposes, staff bonus system or as part of special or package deals, and to cater for groups.